Hello everyone and welcome to the weekly outlook. So naturally, as we can expect going into the last 2 weeks of the trading year, we don't really expect too much in terms of opportunities. However, that said, there are some out there that we can explore and we'll look into them. First off, I want to get through the fundamental side of things and then to concentrate on the technicals. The reason for that is because going into these last couple of weeks of the year, we have plenty of fundamentals and numbers out. However, they have not been impacting the market in the same way as, for instance, if we would think of, let's say, middle of the year around June, July, or even from March throughout November. So there's a different way of how the market interprets a rate hike or an inflation number going into the end of the year than it is in the middle of the year. So just a reading of a couple of headlines here. The Federal Reserve's policy meeting will be the main attraction this week, with speculation growing that the US central bank could signal slowing down the pace of rate hikes. And this has been on the cards. They've been talking about this from 2018, even 2017, that sooner or later the US will have to pause the rate hikes. Policy meeting by the Bank of England and the Bank of Japan are not expected to draw as much attention. So there you go. Economic data will be grabbing the headlines for the rest of the week as inflation, retail sales, and GDP figures due out from Canada, Japan, US, and United States. Sorry, not US, United Kingdom. So, for instance, as I mentioned, all of these numbers will be out. They'll impact the market. They are sure to bring some volatility to the pairs of the likes of the euro, the pound, and even the dollar. However, due to the policy meeting, it won't have, it's less likely that they'll create those technical signals that we are looking for. So, that said, let's look into the more technical side of things and see if we have opportunities solely on the technical side that could be helped by any of the fundamentals in case traders do decide to actually bring money back into the market in the last 2 weeks, which is, as we said, it's not very common, but it's something that can happen. So for instance, on the euro pound here, so this is the first pair of the weekly outlook that I would like to explore. So what we can clearly see is that we have a resistance at around the 90.50 level, and we even have a double top on the weekly here with a pin bar candle. So basically the only way we can play this is to look at the low of the weekly candle and see if we get a new low and get triggered in, possibly having a stop loss above the 90 level, or as we can see right now, waiting for price to retrace back into the weekly candle and then really monitor the 4-hour and see if we get a lower high. If we do get a lower high and we close on the 4-hour for a rejection candle or bearish engulfing, this could be a good opportunity. Again, I cannot stress this enough. So any trades that you enter now, you might have to hold on to them throughout the holidays, which is a good 2 weeks. And if we think about it, even 3 weeks. So even if there's a signal right now, you might enter a trade, but you might not get your 1-2% or even a clear decline into this, for instance, to see some profit in the next 2 or 3 weeks. So just bear that in mind, that you would have to hold on to them for longer. So that's the first pair. Second one is something that we had from last week, and that is the New Zealand Canadian dollar. So this again, based on the weekly, very nice double top, pin bar formation, and then we had a new low on the weekly confirming the already existing rejection, showing that there's further room to move to the downside. So based on that, we had the lower highs on the 4-hour, we had the lower highs on the 1-hour as well. And really what's happening again is we are having a retrace up to the 50 EMAs, showing again a possible development of a trend line on the 4-hour, giving us possible resistance, and then we could sell into this throughout this week. Again, we might have to hold on to it for longer. So that's the two major pairs that I would be looking at when we come from the fact that one market is based in Asia Pacific and the Canadian dollar with the US side, and then more a Eurozone, more a United Kingdom focused pair. So one is really for to diversify into the Eurozone session, UK session, and the other one is more so with the US side of things and Asia Pacific. And so these basically these two main pairs that I will be watching throughout the week. That said, we do have some crosses that are showing the same sort of probability and the same sort of technical setup, but they're really variations of the already existing Euro Pound or the New Zealand Canadian. So take for instance New Zealand dollar against the US dollar, very similar 50 EMA rejection with a 69 level as resistance, a pin bar, and then lower low confirmation. And it's basically right now we have a candle going up and trying to reject, showing us a new lower high. So all of these all of these three pairs will be good to watch. So New Zealand dollar, US dollar, New Zealand dollar against the Canadian dollar, and as well as the euro against the pound. However, so basically the reason why I said it in this order, because that is the lowest on my list. Euro against the pound, it's a good technical signal. However, we have some very conflicting fundamentals, especially from the pound sign and from the UK sign, that makes this trade a bit harder to trust. So if we have a opportunity to get into the New Zealand pairs quicker, and they show us the confirmation sooner, then that's the one that we'll go with. And that is basically it for next week. Hope everyone has a good holiday, and see you guys on the next video.